What's going on, everyone? So for today's class, we're going to talk about the intro to technical analysis. So with technical analysis, basically what we're going to learn is what exactly we are going to need to understand and see on a chart. So yesterday I introduced you guys to the chart that we will be looking at on tradingview.com. And, you know, there's many ways to determine which way the market is going, right? We spoke about 2 or 3 different ways to assess the market, right? We can look at the market from a technical aspect, which is looking at how we're going to learn today, understanding what a support or resistance area is, right? A supply or demand area, right? What each candlestick means, when the market is going up, how we identify that trend. When the market is going down, how we identify that trend. In the future, we talk about how to identify when the market is trending upwards and how we can understand when that uptrend is over and the market changes to a downtrend. But overall, step by step, we will progress together. My goal is that we all achieve the understanding of the information that is shared. Along that, we'll work on identifying that information. And as well as I told you guys, we will be applying it. So the first thing we're going to talk about today is support or resistance. Okay, so with support and resistance, I want you guys to write this down. When trying to understand what support or resistance is, support is the point or the price where the market reached and it reached its floor, right? Like it couldn't go any lower than that. So then the market started to retrace. And let's say it goes up and it hits the high point, and before she starts coming down, right, it labeled a resistance. So I want you guys to real quick think about a house, right? Just as we would have, let's say, a multi-floor home, right? What is your floor on the first floor, right? And your ceiling on the first floor. The ceiling actually is the same as your ceiling on the first floor is actually the same as your floor on the second floor. So overall, the importance is to understand support as your floor, resistance as your ceiling, right? So resistance being the highest price that the market reached, right? And support being the lowest price that the market reached. In that, as we understand in the analogy of a home, right? Give me 1 second. I need everybody to hold on 1 second. Let me make sure everybody that comes in is mute. All right. So as I was saying is, as the market is going up or down, right? If we think of a home, right? If I was understanding that what was my resistance or my ceiling in one floor, right? When I go above that floor or below that floor, that support or resistance may actually change to the opposite. So for instance, if the market formed a support on the second floor, we would notice that that was actually the resistance of the first floor. So for instance, back to this diagram here that I have, right? When the market started going up, it couldn't go any further. It represented as resistance, this green line here. When the market came back down and couldn't go any further, it represented support. So then the market started going up, right? Created a new resistance. And when it came back down, what was once resistance is now a support. So as we progress into the understanding of the market, right, I want you guys to write this down. When identifying what we're looking for in the market, we will understand the following. We can look at the market diagonally towards the upside, diagonally towards the downside, and horizontally either up or down. The important thing is to understand that we have 3 ways the market moves. The market's either going to go up, it's going to go down, or it's going to move sideways. Along that, support and resistance in this case is going to represent one price. So let's say the market came up and couldn't go any further. Well, that price where the market couldn't go any further now became resistance. So then when the market came down, the price where the market started out as maybe, or wherever the market reached its floor, is now represented as the support. So that is now representing our price point for support. So let's say we go onto the chart, and I'm gonna pull up, let's see, I'm gonna pull up a chart here. GBP USD. Okay. Sorry guys, I don't expect it to be this slow right now. So for instance, we were talking about support and resistance, right? So on TradingView, I'm gonna erase all this. This is our toolbar here. So to identify support or resistance, you can use any of the tools that help you identify that. In this case, I recommend you guys use the horizontal line, right? The horizontal line can be found on our toolbar on the left, where you see this stick with the two dots on both ends. If you click on the trend line tools and click on horizontal line, whenever you drag your mouse, you can actually drag your mouse to whatever point and then just click, and it will lay down a horizontal line. Now, if you look right, that line that we have representing as support is now representing the price of 1.20, 150, which basically means 1 British pound is going to give me $1.20 USD. So that is my support area. When I go on to identify my resistance, I'm going to look for the price where the market reached its peak and couldn't go any higher. So let's say this is the price here. And I'm going to label both touches that I'm using to identify where support and resistance is. And being that we have that area there now representing as resistance, we can see that that resistance line represents the price of 1.22487. Again, that resistance line means, that resistance line means that the British pound, if I exchanged it to the US dollar, is going to be worth at that price right there, $1.22, right? So what are we going to say? So we can see here that these bars here moving up and down, up and down. We have an orange one and a black one in this case on my chart. Those are called candlesticks. And candlesticks represent the change in price within a time frame. So as we progress moving forward, we'll talk more about candlesticks. Sorry, guys, I don't know why I got kicked out. So as I was saying here, so the candlesticks are what shows us where support and resistance are based off of the high of the candle to the low of the candle, right? So in a candlestick, and I'll kind of get ahead of topic here, but in a candlestick, right, we have either what is the highest price and we have what is the lowest price, right? So when I'm identifying support, I always want to focus on the low. And when I'm identifying the resistance, I always want to focus on the high. So here we see that with the high of that candle, or the top of that candle, we're able to identify where resistance is at, right? And the same goes here. With the low of the candles, I'm able to identify where the support is at. So I want you guys to understand, where support respected once, support will always respect another time, or it also had respected prior to that. So as we grow to understand, as we grow to understand what support or resistance is, right, we'll also understand that the market moving sideways or upwards or downwards, those are called trends. So identifying support or resistance in the direction that the market is moving, I'm able to identify the trend based off of which direction the market is going. So for instance, when the market is moving up, I'm focusing on the lows of those candles, which help me identify the support of that trend, which in this case, on an uptrend, I only focus on the support. So I'll write it again. Uptrend, right? We're focusing on the support, right? So if I'm focusing on the lows, right, on an uptrend, and I also focus on the lows on a support, then on a resistance, I'm focusing on the highs. So if the market is moving downwards, right, I'm focusing on the resistance or the highs of those trends, of that downtrend. So again, a downtrend, focusing on the resistance. So here we go. With support and resistance horizontally, right, we're going to use a horizontal line. When we're looking for the trend, we're using what we have here as the trend line tool. So when I click on the trend line tool, I'm able to understand and identify where the uptrend or the downtrend occurs. So we wrote here that on an uptrend and downtrend, we're either focusing on the support or the resistance, right? Now, what does an uptrend signify? An uptrend signifies, they signal that the buyers are in control and that price is rising. And a downtrend represent when the sellers are in control and that the price is dropping. So here we have two things to keep in mind. So on an uptrend, I focus on support, which shows me the floor of that trend to the upside. So every time the market goes up and comes down, goes up and comes down, that is the lowest point of the trend. On an uptrend, right, we said that when the buyers are in control, it's causing price to rise, right? And on an uptrend, we're also focusing on the lows of that trend, which in that case, every time the market touches that trend, it's simply creating higher low points. So higher in price, right? So in this case, I use 3 blue lines to identify the touches to the trend. And in that case, if you hear me say, yeah, this and that formed a higher low or a higher high, then I'm able to understand that higher in price, and the second term, higher low, the low means the lowest point of that candle. So I see higher in price, right? So higher in price, but we're focusing on the low of that candle. So every time the market touched the trend, it was higher in price, right? But we focused on the low of the candles. Now, I'm gonna write 3 rules down, all right? And those 3 rules we spoke about in the past class. We said that there's 3 important questions you always wanna ask yourself. Now, when you're identifying a trend, I want you to understand that 2 touches to the trend is the start of a trend, right? 3 touches confirms that trend. And on the 4th touch, the market decides which direction it's going. So what do I mean by that? Let's look at this example. So we can see here that on the first point where the market started going up, we're going to consider that our first touch. So in this case, I'm going to highlight each touch to the trend with a square. So here we have one. Here we have the second one. The market hit the trend line, but kind of came out. We'll talk about that in a little bit. But that's not a touch. It broke out and then broke back in. Right here, the market came back down and touched the trend, and then on the fourth time that the market revisited that trend, it couldn't break it, right? So it actually had the reaction of coming back up. But as you can see here, where we identified as our resistance, the market had some trouble going above that price. So then the market started going down, okay? So 2 touches is the start of a trend. So this right here signaled to us that this was the start of an uptrend. The third touch confirmed that that was the uptrend, right? So we have 1, 2, 3, confirming this is an uptrend. And on the fourth time the market approached the price, it couldn't break it, but then because of the resistance here, the market started to go down. Type 1 if you guys understand that. Type 0 if you have any questions. Awesome. So again, support when the market is moving sideways, right? We're focusing on the low. Support when the market is moving upwards, right? We're focusing on the higher lows, right? Which indicates an uptrend. Resistance on a market moving sideways, we're focusing on the horizontal resistance line, right? Which focuses on one price. On a trend, resistance, we're focusing on the lower highs of a downtrend. Now, the question most people ask is, JL, can I identify the resistance of that uptrend? Because I see that when the market was going up, it was having some trouble breaking some prices to the upside. Yes, when we identify the resistance of a trend, we are now looking at what is considered a channel. So here we have an uptrend, right? We said on an uptrend, we focus on higher lows, right? So higher in price, but we're focusing on the lowest point of that candle, right? Signaling buyers are in control, right? And this is usually signaling that we're seeing movement to the upside, right? Downside, the downtrend, the same thing. Signals that the sellers are in control. Just this time, we're focusing on the lower in price, but the high points of the candle. So every time the market touched that trend, right, it created a lower high point, lower in price, but the highest point of the candle. On a channel, right, we're actually focusing on both support and resistance of those trends. So in this case, the support of that uptrend, when we identify the resistance, we now have what's called an ascending channel. In an ascending channel, you will see higher points, right, creating higher highs, right, higher in price, but the high point of the highest point of that candle, right, and higher lows, creating within that channel. So when we're looking at the resistance of a downtrend and I focus on the support of that trend, then now I have what's called a descending channel. And as we spoke about in a downtrend, we're focusing on the lower highs of that downtrend and the lower lows of that downtrend. So as we can see here, if I focus on identifying the channels, right, there's 3 different types of channels. So we spoke a lot about the trends, right? The 2 different types of trends we have. Now we have the 3 different types of channels. So we have an ascending channel, descending channel. I don't know if I spelled that right. And a horizontal channel. Now, a horizontal channel is, in other words, a zone. So for instance here, when we speak about support or resistance, right, on the market moving sideways, where that support and that resistance is, that can be considered a zone. All right. So on an ascending channel, just like on the uptrend, right, if I'm identifying the 3 touches to that trend, that's confirming the trend. And on the 4th time the market touches that area, when it fails to break it, or if it does break it, that's where we understand which direction the market is going. So we said we have an ascending channel, right? This example right here. We have a descending channel, right? This example right here. And then we have a horizontal channel here. So to help you guys visualize it, right, we have a horizontal, we have an ascending, and we have a descending. Okay, horizontal, ascending, descending, right? On that case, when we speak about any type of movement in the market, it's always important to understand which direction the market is going, either trending or if it's in a channel. I want you guys to understand the following. Every trend is a channel. The importance of what you're looking at, you determine. I want you guys to understand that everything that we're looking at and learning here, right, we're focusing on understanding the information and identifying it. Then when you start working on applying it, then you go on and say, okay, yeah, for me, it's easier to understand the channel because I can see the points where the market may reject on those upward movements. So if it's an ascending channel, as the market is making its way, touching that trend, I can see where the high points of that trend can actually be to help me determine where I should get out if I'm buying short term or whatnot, where I should potentially understand where a correction back down can happen, right? Or also when the trend changes. So tomorrow when we talk about market structure, we're going to learn how to identify the change in trend or structure. So for instance, when I say structure, right? If I have an ascending channel and all of a sudden the market is now starting to go down, or the reaction was that the market went down, well, as we said, every trend is a channel. So when I can see when the market shifted from going up to down, that's called market structure, right? Type 1 if that makes sense. Type 0 if you don't. Perfect, perfect. I know the new guys here. Randy, how you feeling? Angel, how you feeling?
Feel good, feel good. Understand this.
Perfect. How about you, Angel? All right, perfect. David, how you feeling, David?
It's good to review. Feeling good.
Perfect. Chris Maldi, how you feeling? Making sense for you? And if you guys can't talk, just type it in the chat. Evelio, how you feeling, my brother? Perfect. Paul, how you feeling? I see my man Brad is joining us. Brad, you feeling good with the information? Glad to have you on board with us, by the way. Great to hear. Perfect. So, again, so we don't lose track. Wait, so there's someone right there? Perfect, perfect. So we understand what an uptrend is, right? We understand that on an uptrend, if I focus on the resistance of that uptrend, now we're looking at an ascending channel, right? And if I'm looking at the support or resistance of a sideways market, right, I'm looking at a zone. So that leads us to our next topic, which is supply and demand. No worries, my brother. So with supply and demand, how we understand the difference between support and resistance and supply and demand. Remember, I told you guys earlier, support and resistance is the focus of one price, right? So if I'm focusing on support or resistance, right, I understand that horizontally is representing one price. On a trend, it's representing the movement of that trend, right? So on an uptrend, right, each touch of that trend is representing the support of that trend as well, but it represents higher in price, but the lowest point of that price. When we focus on supply and demand, right, supply and demand is just simply, instead of us focusing on one price horizontally, we're focusing on an area of prices. So what do I mean by that? An area of prices. So for instance, let's say blindly, we see that the market was coming down and then it came back up and it came down. And we said to ourselves, but prior to it doing that, after it made this move, it came all the way down here and it created a new low, right? I could use this area of prices between this low and this low to identify what we would have our demand zone, okay? And I want you guys to develop the habit of identifying your supply or demand zones with a rectangle. So here on the toolbar here, if you're looking at your toolbar, you're gonna notice it has a brush. If you click the sub menu and click on rectangle, once you identified what the low was and the previous low, then we'll be able to use those two prices after drawing the horizontal line to fill it in with a rectangle to help us identify the demand zone. So think about it. Supply and demand, right? When there's a lot of supply, price tends to go down, right? When nobody wants to buy anything, people are going to try to put it on sale so people can buy. So what happens is when there's a lot of demand, price tends to go up, right? So if I was selling candles and there was a blackout, you know, I have the power of raising the prices because everyone's in demand for candles, batteries, and flashlights, right? But no one's selling them. I'm the only one in the neighborhood selling candles. Well, guess what? I can bring the price up. So whenever you think of support, right, you think of one price. So in this case, support representing 2150, right? 1.2150. In this case, the supply zone, the demand zone, excuse me, which is also representing as our support, just we're focusing on the area of prices between that first support we identified and the next support we identified of 1.19594. When we highlighted it with a rectangle tool, we can see although the market did come down all the way here, it respected the zone, and the reaction was that the market started to go up, right? So if I use my resistance line here, right, and I identify a previous high above that, let's say I go with this price here, right, I can see that after filling in this rectangle here, I can see now that I have what is considered my supply zone and my demand zone. So I'm gonna write it here. Supply, which in other words is also serving as your resistance, right? Area focuses on that area of prices between, let's the most clearest way we can put it, the highs of that price, right? And the demand, which is also representing as our support, right, focuses on that area of prices between the lows of that price. So I have it here that I understand that supply is an area of prices. So we see here that supply, which is also my resistance. serves as the area of prices between 1.2247 and 1.22688. So I want you guys to write this down. For me personally, I find myself identifying supply and demand zones more than just my support and resistance areas, because at the end of the day, those zones actually represent that resistance or support area. Understanding when the market fails to maintain price above a supply zone and it breaking back in, I understand that at least I can ride that trade if I decided to take that sell, right? Because selling, when we sell, we want to see the market come back down, right? Knowing that the market failed to hold that, I can at least ride this to the last previous demand zone. So in between these two zones I drew here, right, there's always going to be, because every high of each candle represents a resistance, right? So just like how we understood that in a trend, it's always a channel, right? In every zone, in that case, or in between two zones, there's always going to be more. The importance is to understand which ones are the important ones. And the way we do that is by identifying them from the past, which ties into the questions I told you guys to focus on, right? What happened in the past, right? So when I go on to look at, let's say, my support or resistance areas, and I'm gonna delete these so that we can use the past to kind of dictate for us how we could have paid attention to the future. Let's see, I'm gonna drop to a higher time frame so I can see that information. All right. So here it is. If I would have used my horizontal line tool here to identify the support here. And again, remember, when I'm identifying my demand zone or my supply zone, I'm using my support. And where I identified support at, all I'm looking for is the last previous low before that. So if this is my low, I now have one zone here, right? If I go ahead and identify the high and look for my last previous high to that, and when I mean high, right, last previous highest price. So here I have another zone. So if I fill this in with a rectangle, I'm going to be able to visualize where my supply and demand zones are here, right? Another rule, when you guys are identifying supply and demand, I like to identify my supply and demand and also find the median zone, right? That area of prices in between those two to help me find where the midpoint of that market is. So for instance, if I identify this as a support or the resistance, as we would say, then I would just simply draw my zone based off the last previous low. So to help you see where I drew those points from, I took this low and I simply just identified the previous low, all right? And then I fill that in with a rectangle tool to help me understand the current price area in between here. So we go back down to the 4-hour chart. And I look at the current price based off of what we were looking at here. As you can see here, from the previous data, I can see where the market was respecting the most. So as we said, if the market failed to hold price above a supply area, right? Supply representing an area of price where the market is, reaching its resistance, right? We understand that when there's a supply area or when there's a lot of supply, price tends to go down. So in this case, the market started to go down. And as I told you, my importance is to understand where the previous demand zone before that was, because where there is resistance, there's going to be a support, right? When the market started to come down, as you can see here in this example, the market came all the way down to the last previous demand zone, which in that case is also my median point, which in this case, as we spoke about with support and resistance, right? And I hope I don't lose everyone here. This being a demand zone, when the market broke below it, now that same zone is representing here as a supply zone. Type 1 if you guys understand that. Perfect, perfect. So again, when we were talking about support and resistance, we understood as the market is moving up or down, that same level of support or resistance, if the price breaks above it, right, and the price comes back down and retests that area there or that price point, that can actually become the opposite. So if that was a resistance area before or resistance price, then when the market broke above it and came back and couldn't break below, then now that became support. Let's see, Angel, how you feeling? Bianca, Jacqueline?
I'm probably gonna have to review this one over.
No problem. Where am I losing you? I want us to make sure that we're all on the same page.
So tell me, how did you draw the middle, the median?
Yes, so
What 2 points did you use?
So I'm gonna go back down to the daily chart so I can see that, because the 4-hour chart, it wasn't showing it to me. So I drew this zone above and this zone below based off the highs, right? So I went with this high and I went to the last previous high, right? So high and high. You can see here how the market kind of still was respecting that high price. Prior to that, this was the highest price the market saw, right? So I drew my resistance lines on both highs, giving me that zone there, right? When I identified the lows, I went from here, my demand zone, I drew my support here and my support here because this is the low and this is the last previous low, right? So let me zoom in so you guys can see that. So low, last previous low, you see that? When I identified the zone in the middle, I just found where the market, see how the market came down from here to here, and then the market started making its way up. In between that, I focused on this support area, and all I did was identify this as my low and my last previous low, which gave me that zone. So as you can see here, how I validate if this is a valid zone, well, as I see the market going above or below, we can see how when the market goes above, the market has a tendency to stay above that price right around here, and then it couldn't hold, so it broke below, right? And then look how right before she broke below, she came back here and then kept going. Those are points validating, which is going to tie into what we talk about next. All right, but let me know if that kind of answered your question.
Yes, thank you.
Perfect. Let's see, Jeff, how you feeling?
This is great. This is all still kind of fresh for me, so I like the refresher.
Perfect, perfect. Randy?
Pretty good.
Awesome. I'm not losing you, right?
Nah.
Awesome. Let's see, Mr. and Mrs. Daniels, how you guys feeling?
Feeling good, feeling good.
Perfect, perfect. Kurt, how you doing over there?
Feeling good, bro.
Awesome. Devani, making sense to you?
Yes, sir.
Perfect, perfect. David, how you feeling with this information?
Feeling good, making sense.
Awesome. Chris Maldi?
Yeah, it's making sense.
Awesome, awesome.
Mhm.
How about you, Brad? Awesome. That's it. Dean, how you feeling, Dean? While we wait for Dean, Furman and Jose Gonzalez, how you guys feeling? Making sense?
Yes. It's definitely making sense. Feeling good.
Bro, I have solos right now. I have no idea what. No, I'm kidding, bro. Yeah,
I was about to say, you out of all people, bro. Hemi, my brother, how you doing, man?
I'm good, bro. Good. Sorry, I'm late, bro.
No, you good, you good. We were just talking about supply and demand areas. I was asking everybody if they understood how I was able to identify the supply and demand. Everyone, this is Hemi. This is one of my students from Australia. Glad to have you on board, my brother.
Sweet as, my man.
Let's see here. Joel has his mute mic not connected. Paul, how you feeling? Calvin, making sense to you while we wait for Paul?
Yeah, everything is good, man. It's like a review.
Perfect. I think that's everyone. Evelio, you're on the same page with us, right? I know you're packing, about to go on vacation. So, which brings us now, while we wait for his answer. All right, perfect, Paul. We're going to talk about now, so just I'm going to review real quick. So we understand what an ascending channel is. We understand what an uptrend and downtrend is, right? Jacqueline, how many touches to the trend show the start of the trend?
The start is 3.
No, the start is 2.
The start is 2, sorry.
What confirms that trend is 3.
3, and the 4 gives us the direction.
Correct, right? So that also comes into play for supply and demand, right? So let's say I'm looking at supply and demand, and I see that the market hit supply and demand 3 times, right? Well, here we have the market touching it once, touching it twice, touching it 3 times. On the 4th time, the market broke it all the way. See here, the market broke it. Now, the important thing is to understand what time frame we're looking at, which ties into our next conversation of what is a breakout and what is a fake out. Okay? So a breakout is when, and I'm going to use my whiteboard here. So a breakout is when, let's say we have supply and demand here, and I have the market making a push to the upside. So we've seen here where prior the market, maybe the market came up, and then came back down, right? How do we know that the market is going to continue going to the upside? Well, when the market breaks into a zone and comes back and turns that zone. So for instance, this zone here was a supply zone. And when the market comes back down to retest, making that a demand zone, right? That's called a retest. And what the market did right there was confirm us that the price broke out of that zone, which was a supply zone. And now with the retest confirms the breakout, which signals that there's further continuation to the upside. Now, let me handle this with caution before everyone goes, oh, the market actually broke up, retested, right? And then I'm assuming right away that the market's gonna go up. You have to be careful because there's times where the market fails to break the resistance or the highest price the market saw in that move, right? And that price does not continue going up. And if anything, it breaks back in, right? Now signaling a potential fake out. And what confirms that fake out is when the market comes back and retests the price point or the price area it broke out of. So again, a breakout is confirmed when the price breaks above a price point or price area, right? And retests that price before continuing going higher. Now, when the market breaks out of an area and can't come back and retest and breaks back in and retests that price that it faked out of, right? Because this whole move is a fake out. then this move right here is considered a fake out. So, and some signs of what a fake out and breakout look like, right? So here we have the market moving to the upside. If this was support, how we confirm that? Well, when the market retests and breaks above, then this right here is a confirmed breakout to the upside. A breakout to the downside is when the market breaks a price point or price area and the market comes back up, turning that previous support into a resistance now, and the market continues going down. Both confirmed with a retest, right? So we spoke about the retest, right? And I'm going to abbreviate it here to B.O, to a breakout. A fake out, which I'm going to abbreviate as FO, is when the market breaks above, can't hold price above the price point or the price area, right? Remember, support and resistance representing a price point, supply and demand representing a price area. So if the market can't hold price, right, or maintain its momentum to the upside and it breaks back into the price point or price area, then when the market retests, we now have a confirmed fake out. And the reaction to the market is a downward push in a sense. A fake out to the upside is when the market fakes out to the downside, it breaks back in and retests and continues going up, right? The reaction being that the market broke up. So this right here, this whole movement to the upside, the first movement is a fake out after the market broke back in and retested. If we ignore this and we look at this move back in and then the retest, that is just like what we see here. So on a breakout, we're paying attention to the first move, right? The first move was a strong push to the upside, breaking the support, the resistance or your supply area, and converting that resistance or supply area into a support or demand zone with a retest of that price and the price continuing to go up, breaking the previous high. I said a lot there. Type 1 if you understand that. Type 0 if you don't. Perfect, perfect. Awesome. Awesome. Bianca, how you feeling? Oh, read my mind. Perfect. Hemi's understanding. Awesome. David, how you feeling? Making sense?
Yes, sir.
All right. So let's put this. Let's see some of these examples on the live chart with the supply and demand zones and the trend, right? So real quick, before I show you guys that example, while everyone's typing 1 or 0, right? If I have support or resistance, if I'm looking at it based off a horizontal movement, or if I have a trend, right? When the market is touching the trend, if there's ever a moment where the market fakes out of the trend, right? What confirms this move of the fake out of the trend valid, right? When the market comes back and retests. So earlier, I showed you guys an example of an uptrend. And in that uptrend, we saw a perfect example of where the market faked out of that trend, but broke back in and retested, right? So here we have, I'll go back down to the 4-hour chart. So here we have 1, 2. Let me turn this red zone gray so we don't get confused. So here we have 1, 2. The market came back, faked out, right? And retested on the next candle, the zone, when the market couldn't hold its price above, right? Usually, I want you guys to understand the fact that when the market is trending upwards or downwards, right? If this is an uptrend and the market is touching the trend and then fakes out and then touches it again and then fakes out and then touches it again, what will be our touches to the trend? Will we count the fake outs or will we count the actual touches of the trend? Bianca, what would you say? Are we including the fake outs, or are we just focusing on the touches to the trend? Exactly. We don't include the fake outs. Angel, if I'm looking at a zone, a supply or demand zone, right? If the market breaks out and fakes out and then breaks out again and then fakes out, where am I focusing on the touches of the trend? Am I looking at the fake outs, or am I looking at the actual touches to those zones? Exactly. Now, if I was looking at the market in general, right, based off of what we drew here with these zones, I can see many times that there was areas of support or resistance that the market broke out of, right? So here we have, I'm gonna just label some resistance price points, and we can see here that the market, after dropping, right, attempted to make a move to the upside. It couldn't hold this zone here. So even if I took this price here and identified a zone here, the reason I want you guys to focus on zones, not just support and resistance, is because we can see, although the market broke into the zone here, after she couldn't break above the highest point of that zone, when she started making her move back down, right, we can see right before she made her move to the downside, she came back for a simple retest, confirming that that move to the upside was a fake out and we are actually going down. And then right before that, the market made its real move to the downside. We can see that the actual movement to the upside was fake, and then the market came back one more time to retest and then made its real move to the downside. Type 1 if you guys are with me. Perfect. Randy, does it make sense, or does it make sense, or it looks foreign language to you?
No, it makes sense.
Okay.
Yeah, the way I'm kind of seeing it, it's I don't know if this would count, but the breakout would be more like a N, kind of the Harry Potter sign, and then the fake out descending is like the M, whereas the ascending fake out is kind of a W. Right? That's just kind of the way I'm seeing it, but that's the way I'm understanding it.
Yeah, remember, I don't want you trying to develop the sense of how to remember this. The point is right now we want to understand it. Although you're correct that, yeah, it looks like the scar Harry Potter has. Just remember the direction. If the first movement to the upside didn't retest and continue going up, and instead it breaks back into the price that it originally broke out of, right? So for instance here, we see here that the movement was to the upside. The market couldn't break above here. So the market actually, after retesting, broke back the price that it broke. You see the red line here?
Yep.
It broke back in, came back, retested that price, and then started going out. This whole move right here, when the market retested that price right there, that is a fake out. And we know that after a fake out, the reaction to the market is a downside move. Okay?
Got it. Thank you.
Perfect. Bianca, that answers your question? Perfect. So here's an example of a breakout, right? So a breakout to the downside now. So here we have a move to the downside, right? Although the market came, hit, broke, right? It broke the zone. We're focusing on the zone here, right? Right after the market broke the zone, the market came back up, retested, and then made its move, creating a what? A low. So we said on a descending channel, we focus on the lower highs and the lower lows, right? So if I take all of this here and I were to identify the potential channel of this here, I can identify the lower lows of that channel there here. So we have lower low, right? We see that the market faked out of the channel, came back, retested our zone and stayed within the channel, came back, faked out again, retested, came up, couldn't break. Here we go. After the market held that structure, came back one more time to retest, the market actually broke not only just the zone or the price, but it actually broke out of our channel. So after the market broke our channel, right? Here's an example of how a breakout of a trend or channel comes back, retests, and then continues going down. You can see here that prior to it breaking here, came back up one more time, couldn't break back into that channel to continue going up. Instead, the market reaction was it created a new low. Let me know if that makes sense to you guys. Type 1 if it does, type 0 if it doesn't. Angel, how you feeling? I know it's your first time hearing this. Let's see. We wait for Angel. Perfect, perfect. Brad, how you feeling? David?
Feeling good.
Perfect. Let's see. Bianca, how you feeling there? Jacqueline, how you feeling? I'd love to hear from you. Let's see how you feel.
Feel good about that one. I understood.
Awesome. You're with us 100%. Is there any concerns or confusions you may have of what we spoke about today?
No. So far, so good. So far, so good.
Perfect.
It's only I want to make sure that I'm able to, and I know I can do it on the homework assignment, whatever that is, or get in 30 minutes earlier. Just want to make sure I'm able to draw my zones correctly. That's all.
No problem. So remember, and we'll review it again. So prior to us taking the next step of what the homework is, let's review what we spoke about. So I sent you guys all a cheat sheet. If you don't have it, you can download it off the school's website in the course. And on the cheat sheet, I kind of have what's called the structured cheat sheet. So if you look at the structured cheat sheet, there is a page on it that shows you what an uptrend is, what an ascending channel is, what a downtrend, what a descending channel, right? What a breakout to the upside is, what a breakout to the downside is. And you see here, confirmed breakout, right? Confirmed with the retest, and the green or red signals the reaction the market has after that retest, right? So a fake out to the upside is when the market fakes out to the downside, breaks back in, and then retests, and the reaction is an upside move, right? A downward fake out or a bearish fake out is when the market goes up, can't hold price, breaks back in, retests, and then goes down. When we're identifying your supplier demand zones, right? When I focus on identifying my resistance area, right? Resistance being the highest point the market saw before the rejection. When I want to identify my supply zone, my job is just to find the last previous high. So last previous high, I place another horizontal line, and we will just fill it in with a rectangle, whatever color you want, right? When we focus on identifying the demand zone, right? I'm identifying my low, and I would go on and find my last previous low, and I can just fill that in with a rectangle. And then I would have multiple zones identifying them. So again, low to the last previous low, there's another zone there, right? Make sense, Jackie?
I got it now.
Perfect. So let's review. So we spoke about uptrends, downtrends, right? Uptrends and downtrends, we're focusing on the resistance of a downtrend. We're focusing on the support of an uptrend. When I go on to find the resistance of an uptrend, that now becomes an ascending channel. When I find the support of a downtrend, then that becomes a descending channel. When I simply just find that one price point, which was the highest price, that is my resistance. When I find the lowest point of the market and there was rejection there, that becomes my support, right? So support and resistance, support being my floor, resistance being my roof, right? And what was once support can become resistance, and what can become resistance was once what was once a support becomes resistance if the market breaks above and retests, right? But if the market fails to break out, right, a breakout confirmed with that retest, we understand that the market breaking back into that price is still holding that down as a resistance, and what confirms it is the retest. We spoke about supply and demand, right? The difference between support and resistance and supply and demand is that we focus on the area of prices between the two highs, right? Where that supply area is formed. And the demand area is formed, right, when we focus on the two previous lows. So if we identified one low and we focused on the previous low before that, then we would have our demand zone, right? Remember, supply and demand. When there's a lot of supply, the market's price tends to drop. And when there's a lot of demand, we understand that the price tends to rise. When we were talking about a trend, I told you guys that 2 touches is the start of a trend, 3 touches confirms that trend, and on the 4th touch, the market decides which direction it goes. So if the market breaks out of that trend, right? Keyword we spoke about, breakout, fake out, right? If the market breaks out of the trend, right, on the 4th touch, then we know that after the retest of either the trend or the price area or price point, that the market can continue going down, right? If the market fakes out and breaks back in with a retest, then we know that the market has a chance of going back up. And in this case, if it was an uptrend, right? And I'll draw this one out for you guys so you don't get confused. If this was an uptrend and we have the 4 touches, and on the 4th touch, the market broke back in, retested, right? We at least know that as long as there's a resistance here identified, I can at least know that if the market does break above that resistance, as long as it retests, there can be continuation to the upside. If it doesn't, right, and comes back in, then I know that the trend can still be broken. And if this is the price point or the price area we're focusing on, right, this move overall is a fake out, and that means that we can have a push to the downside. When we talk about market structure tomorrow, we're going to focus on how to identify when that uptrend changes to a downtrend. So when the market drops, right, I'll give you guys a preview real quick. If this was the market structure and this is the highest price the market saw in that trend, when the market breaks that trend and comes back and retests the last touch of that trend, which confirmed that uptrend, and we now have 2 touches confirming that that is a start of an uptrend, not confirming the downtrend. Okay? For your homework, I want you guys to label and identify. I want to see 3 zones, right? Supply, demand, and the one in the middle, which is either supply or demand based off of what area, But either way, I want to see 3 zones. So let's say I'm going to erase a lot of these. So let's say I have 3 zones here, right? Supply, demand, and this is either supply down here or demand up here, right? I want you to identify the trend in the channel, labeling each trend and channel. Okay, how you will label those trends and channels. You're gonna go here where the T is for text, and you're gonna use the call out tool and label. Here is my ascending channel. Here is my descending channel. All right, here's my supply zone. You do the same for your demand. I want you to identify an area of where the market broke out. So if you say this was a breakout, right? And if let's say this was the retest of that breakout, right? So here's the breakdown, came back up, retested. That's my breakout. That's my retest. I want you guys identifying all of that. Remember, we spoke about breakouts, fake out, supply, demand, uptrend, downtrend, horizontal channel, which is just like your zone, right? I want you to identify as much as you can for me. And once you finish doing your chart, you're simply just going to click on the little camera on TradingView, take a snapshot, copy the link. If this thing loads. Copy your link and just place it on the homework channel of the 2-week program, and I'll be able to review it like that. If you want me to review your homework and you participate in the review of the homework, just tune in at 9 p.m. tomorrow. Before we start the class, I'll review everyone's homework. I will record it so that if in the case you don't, you can just watch the recording of the review of the homeworks before we start. And then we'll get going on with the next class, which we will talk about market structure, okay? And then once we work on identifying what the market structure is, right? On Thursday, we're gonna talk about the candlesticks. Does anybody have any questions or any confusions from today's class? If you don't, type 1, and I wish you a great night. If you do, type 0, and let me know what your question is. Jacqueline, you had a question? Oh, no. No, I haven't actually. Thanks for reminding me. All right, so I'm actually not going to assign a pair to everybody. I want everybody to pick one currency pair to work out throughout the whole 2-week program. Okay, so for instance, Jacqueline, if you like, if in the past, you were looking at the charts and you like USD CHF, then just stick to that one. Whatever currency pair you want to focus on for the whole program, just pick that one and work on it with what we learn day by day. I want that to be where your homework is done.
Okay.
Thanks for that, Henry. But I want to make sure everybody's good. Let's see. Mr. Daniels, how you feeling?
Great.
Good.
Perfect. Mach, what's good, bro?
Chilling, bro. Over here looking, watching, learning.
Good to have you on here, man. Brad, how you feeling? Let's see. David.
In terms of homework, where would you like for us to submit homework?
In the bottom of the general chat of the school, I created a
homework.
Yeah. Just
Okay,
paste the link in there. You don't have to screenshot it, so you don't waste space. Just copy it and post it on there.
Sounds good.
Remember, guys, no homework. I'm kicking you out the class tomorrow. No offense. All right, everybody submit their homework. Let's see, Javani, how you feeling? I know it's your first time with us.
I'm all right. I'm just trying to go over it in my head.
Where am I losing you? Let me not let you go and then you walk away still not on the same page with us. Where did I lose you?
Hold on, I'll get back to you in a second because I gotta try to put it into words as to what I'm a little confused about.
All right, say no more. If anything, if you want, let me see, what time is it? It's 11. Just gather your thoughts, and then by the time I ask everybody.
Yeah, that's what I'm gonna do. Give me a second.
Let's see. Angel, if you can unmute yourself, I'd love to hear back from you. How you feel?